another member of the MoneyLion community, bringing up a great question. What's the number one mistake retail investors keep making? We have a special guest with us today to tackle this very question. I'm talking about CNBC's own Dan Nathan. Dan has a lot of great things to say about investing, but today he'll focus on helping us avoid some of the pain that comes from buying or selling the wrong stocks, especially at the wrong time. And don't forget to like, subscribe, and comment below with your favorite tips from today's interview. Dan, let's get started. From what you're seeing right now, what's the most common mistake retail investors, especially young people, are making? And why do you think it keeps happening?
I think the really important part of that question is, why does it keep happening, right? And so the thing that I've noticed over the last, let's call it 30 years in the market, is that there's continually this move to chase big themes, whether it was .com, whether it was cloud and mobile 15 years ago, whether it's AI right now. And I think you have to be a little bit more discerning than just chasing every stock or every theme that seems to be working.
Everyone's talking about AI stocks, crypto, meme stocks, basically anything that's trending on social media. How do you tell the difference between a real opportunity and just hype?
So let's just look at crypto for a minute. I think a lot of investors have been attracted to, let's say, Bitcoin or Ethereum because of the utility that they supposedly have. But then there's all these other coins, right? That they call them altcoins. And these are the ones that move around a lot. They get a lot of headlines, whether it be on the message boards or on social media, and people are chasing them. Differentiating between high quality investments with less risk to the downside versus low quality investments that may work short term, but not long term.
Let's talk about the AI hype specifically. How do you separate real investing opportunities from just riding the momentum wave?
Some of the biggest stocks in the market, whether it's Microsoft, whether it's Nvidia, whether it's Google or Amazon, they've been spending a lot of money to build out the infrastructure to be leaders in this space going forward. One thing I'm fairly certain of is those companies are going to be around even if this theme has a bit of a downturn, right? They're going to be around in 3 years or 5 years or 10 years, right? But what might not be around is some small cap stock that put out a bunch of press releases, how they're going to benefit from generative AI, that sort of thing. And it becomes a meme stock. Maybe it doesn't have the fundamentals. Maybe it doesn't have the moats for their business. Maybe it doesn't have the high quality managements that some of these other have, but there's a narrative around it and people on social media like it and people are making money on it. So why not chase it?
Okay, real scenario. Someone bought a meme stock at the top because of social media hype, and now they're down 30%. What should they do?
So if you're thinking long term and you make what you feel is a mistake because an investment doesn't go up, well, maybe there's just a short-term blip. But if you're own a stock that's down 30% and the S&P is down 10%, well, something's wrong there, right? And you got to figure out what that is. And if you start getting nervous about an investment, if you think you're in a bad position, you start to move your feet just a little bit.
You mentioned moving your feet when an investment goes bad. What does that actually look like in practice?
Let's say you own 100 shares of some stock and it's immediately gone down 10% and it really is not participating with a market that's going higher. You're feeling kind of nervous. Maybe you sell 25 of those shares, right? Just to do something. You're locking in a loss, yes. But if the stock were to continue to go much lower, at least that you've moved your feet a little bit. I think the hardest thing for a lot of investors is learning how to lock in a loss. And one of the best parts about that is the more that happens to you, the more you move your feet, the less likely you are to take really sort of catastrophic losses that make it really hard to come back from.
You've seen multiple market cycles, the .com bubble, the '08 financial crisis, now the AI revolution hype. Do you notice any patterns that keep repeating?
Having some more of an even keel, not always chasing the hottest things in the market and not always being, overly pessimistic when things feel really bad. I think that's a really consistent theme in markets in general, whether you go back 10 years, 15 years, 25 or 50.
All right, Dan, any final advice for young investors who are just getting started?
Nobody's going to be perfect at this, but one of the things that I learned early, you really have to learn from that experience, whether it be upward, whether the market keeps going, or downward. In a bear market, a lot of the behavior is really similar. And so I think that is probably a pretty good example of the differentiation that should exist when you're looking at the markets, investing in individual names or different themes.
Dan, this has been incredibly insightful. Thanks for sharing your experience with us.
Thanks so much for having me. Take care.
It's not every day we get to steal one of CNBC's top analysts. What a privilege to hear from Dan today. Let's quickly recap his 7 great tips for avoiding investing mistakes. Tip number 1, don't repeat history's biggest mistakes. Tip number 2, pick names that work well over time. Tip number 3, trust quality stocks, not meme stocks. This is a hard one for some of us. Tip number 4, understand how much you could lose. Tip number 5, learn how to lock in your losses. Wise words from someone with tons of experience making and losing money. Tip number 6, adopt a long-term view to avoid pain and frustration. Very smart. And tip number 7, take calculated risks, and I would add, do your homework. Learn about the company and what they do to be profitable before you buy their stock. Just my 2 cents. I hope you enjoyed today's video with Dan Nathan. Comment below with some of the things you learned. You can also share this interview with a friend to avoid making poor investment decisions. Hey friends, thanks for being with us today. Be sure to like and subscribe for more financial tips from top experts, mentors, celebrities, and influencers. Don't forget to check out some of the other content on our channel. See you soon.
Got a money question? Head to gobankingrates.com and ask away for a chance to win $500. Your question could be answered by a top financial expert.